Hope you're doing well today. It's Wednesday, the 2nd of September. Here for just a quick update on the markets, talk about what we're looking at, what we're seeing, key levels to potentially trade from on the forex side of things, potential pairings that you might want to be looking at. So let's go ahead and jump into it. We're going to first run through news, over to forex, and then into the futures market. So let's start right over here. First things first, there is news coming up today. Now, we mentioned this earlier in the week. This is the first week of the month, and traditionally first week of the month, unless there's like a holiday on it, is non-farm payroll week. And what that means is the first Friday we have non-farm payroll. The Wednesday prior we have the ADP non-farm employment change, which is the precursor to non-farm payroll. These are big deals because, you know, we've talked about before, the market's like this freight train. It's just moving. It's doing what it needs to do. It kind of keeps going in a certain direction until there's something that causes it to need to change direction. You know, it's that object in motion tends to stay in motion thought, you know. ADP report, precursor to non-farm payroll, the non-farm payroll, those could be market movers. They can be things that actually start changing the direction of where we are, depending on how the market digests it. I mean, it's very possible that news comes out, market goes, it wasn't as bad as we thought it was going to be, and it just keeps cranking as it has, you know, for months on end. So no one knows what's going to happen. The bottom line with all that, for me, and I know I say this all the time, and I very often sound like a broken record, but consistency is the key to trading. It's all about consistency, and you know, having a consistent approach. And for me, a lot of people, well, I mean, for me, I don't want to try to front run the news. A lot of people love trading the news. They go, I'm going to watch this news event, and as soon as I know what the result is, I'm going to take a trade. More power to you. I feel like it's a lot of stress. Have I been known to do that in the past? Yeah. But what I came to peace with was that the news is going to come out, and the market's going to chop around. I mean, more often than not, the market goes choo 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 choo, and then it finds a direction and it goes. So, for me, trading right on that news just created this really intense, stressful time when, you know, you're positive, you're negative, you're positive, you're negative, you know, and it just wasn't a good outcome long term. So for me, I'd rather let the news happen, let the market return to normal, find its direction, and then go. Are there the times when you just totally miss out on this potential trade? I say miss out, but that's how people look at it, unfortunately, where the market just has the news, it takes off, and it never looks back. Yeah, sure, that happens too. More often than not, it just chops around and then finds a direction, you know, after a little bit. But yeah, there are the times when it just goes. But those times are fewer than the times where it chops around and creates all that stress. So why not just let the market do what it's going to do? There's always another day to trade. There's always another time to trade. There's always another trade, right? So let the news happen. Let the market return to normal, and then go. It's a little more evident. I mean, I guess that's more directed, I think, to forex than anything, because the news occurs before the regular trading session begins in you know, for the indexes that we're watching anyway, for the S&P or for NASDAQ or you know, so maybe not as big of a deal though, but there still is, because, you know, even on the open, there's how is that digested and then applied. So anyway, I don't want to spend too much time on that. Just know that we've got some stuff coming up today. We've got ADP non-farm employment change report coming up, which is a high impact report, a potentially high impact report. That'll happen at 7:15 Central, 8:15 Eastern. So here in about 15 minutes, that's going to occur. And then after that, you've got Bank of England Governor Bailey speaking. It's a red report because of who it is, not necessarily what he's talking about. He's going to be talking about digital currencies, and oh, you know what? I thought this was his digital currency talk. Huh. Okay, well, interesting. I would have sworn earlier in the week this was slated as a digital currency thing. So anyway, so he's talking about the economic impact of coronavirus. That can actually be a big deal as well as the Bank of England. You're talking about a major market maker there, especially in the forex side of things. That could be interesting as tidbits and sound bites come out of that speech, and then the following Q&A that'll come from his testimony. So anyway, that could be market impactful as well, especially for the forex traders out there. So let's have a quick look at what we're going to see on the forex side of things over here, and then we'll get over to the futures side of stuff and start looking at key levels. For forex, my suggestion would be to stay out of it, until we know what the news is, right? So you've got that 7:15 news coming up. That'll be the ADP report. More than likely what you'll see if you have your currency set up something like this, and you've got your bid and ask lines on there. You always want to show bid and ask. That shows you what your spread is, and it kind of lets you see what the market's up to. It's a big deal because when the spreads are normal, like they are now, you've got a fairly regular market. You've got good participants. You've got good flow. As you get into times of day when you have lighter volume, the spreads start widening because the market makers are having to change where they're willing to do business, and they need to widen the spreads a bit, where they're willing to buy, where they're willing to sell. Same with during times of news. As we come into this news event, more than likely we're going to see spreads, especially at that minute or so leading up to the news event, and then a minute or so after. And it could be less depending on the outcome of that news. Typically, and especially on Friday, we'll see spreads widen, and sometimes spreads that are 1 or 2 pips can go to 7 pips, 8 pips, 10 pips. I've seen spreads as high as 30 pips on news. So be aware of that. That can take you out of a position just on spread, just the spread widening. Because that happens. As you have this big unknown coming up. Orders are taken off, where people are willing to buy or sell comes off the board, and that just widens the distance of where they're willing to do business, and so your buy and your sell points, your bid and your ask points just get wider and wider. And if you've got a stop loss in, because that's a market order, a pending market order, what'll happen is if you've got a stop loss, let's say 10 pips above where the price currently is, and your trade's moving along, and then all of a sudden you've got this news coming up, and everybody pulls their orders off, and the spreads widen to 30 pips, you're going to get slipped because you're going to get taken out at whatever that current price is that's beyond your stop loss point. So just be aware of that. For right now, I'd wait. We've got some things coming into the session. Obviously, looking at our currency meter, we can see we've got the Canadian has been a fairly strong currency in relation to others. You've got some weak currencies here. The euro is definitely a weak currency, and you've got the Aussie and the yen as weak currencies as well. Of course, these are outside of their actual sessions. So while I like to look at them, I certainly like the CAD yen. That's always a nice little currency pair to trade, especially when you've got a day like today when you're coming into this and it's moved 40 pips. It's typical. It's about 60. Is there room to get a quick 20 off of it? Maybe. But I'd rather look at something a little more volatile. If you look at the euro versus the CAD, it's moved 80 pips on the day. Average is about 100. So maybe even lower, around 90 to 100. So again, is there opportunity to get that quick 20 pips that we might want to do on a breakout? I don't see it. The one that would be really one to watch would be the pound CAD. Unfortunately, if we look at the pound CAD, it's moved 80 pips, and its average is about 125 to 130. There's more opportunity there to get that quick 20 pip hit in order to get into profit on a breakout over here. But as we can see here, the CAD and the pound have been kind of trading right together. So what we would need to happen in order to make that work is we need to have the CAD continue to strength, but we need to have the pound start to break below the midpoint here and diverge from it. And as that happens, we would see our volume detail, continue to support the selling side of this, and as we broke through the bottom, that would give us the opportunity for that movement. But at this point, I wouldn't do anything until after the news hits, and especially anything pound related, which will impact the CAD pretty drastically as well, until after we have the Mr. Bailey speaking over here at 8. So I think long and short of the forex side of things is we should just wait, because realistically, what's the likelihood of having a trade move our full measure in 15 minutes between here and here? I think it's better off just wait until after this happens and see if there's trading opportunities. And if there are, great, we take it. If there's not, that's fine too. We just move on. So, are there opportunities? Potentially, but I think it's better just to wait until after the news and then roll from there. Over here on the future side of things, we just keep cranking to new highs everywhere we look. It's gotten, I think it's been ridiculous for a while, but it's really hit this fever pitch of just a straight up market that, I feel like it's unsustainable. But again, the market doesn't ask me for my feelings. We have to separate what we think and what we feel from what's actually happening, and that's why we need to have a rules-based trading method. So right now we look at this and we can see that the 4-hour on the S&P is long, the 30-minute is long. That tells us to continue looking for long trading opportunities. Well, where would we do that from? Well, a couple of key spots. We look here at 35.20, 35.20. Anyway, look at 35.20, and we see a key level down here where price has come up. It's resisted off of this level previously, broke through it, hasn't retested it. So 35.20 would be certainly an area to retest. Another key level over here, looking at the 30-minute, and it's really it was yesterday's close and the previous day's high. So yesterday's close and the previous day, if I can scroll over, the previous day's high is right here at 35.30. So really you've got kind of a top level and a bottom level of where you might be looking at potential reversals if price pulls back to 35.30 to retest the open and yesterday's high, maybe even down a little bit further down here to 35.20 would be the levels to look at if you're going to buy on pullbacks. The other method that I really like is to wait for price to continue to make lower highs and lower lows, and if it does continue back above that, play the breakout of that previously closed lower high. That gives you a really nice opportunity to move in the direction of the trend and also take advantage of that pullback without having to call a bounce, without having to try to call a bottom. When you're looking at that pullback and then it starts to push back up in the direction of the trend, you're playing more of a market momentum breakout of that previously closed lower high. So that's a great way to go, watching here the S&P. So a couple opportunities just to recap it really quickly. If you're looking for straight on pullback bounce trades, 35.20, 35.30 would be the areas to watch. Otherwise, just be patient, see if the market pulls back and gives us a breakout with some momentum above a previously closed candle. And also, if it does start pulling back with a lot of just a heavy strength, just a lot of momentum on the downside, do watch for your my brain just stopped working for a second. Moving averages to cross. If this crosses, if this has a lot of momentum moving down, and certainly if it breaks down here below 35.10 down towards 3,500, we'll see our moving averages cross. And if that happens, we would be in a situation where these are conflicting, the biases are conflicting, and then we wouldn't trade. Right? Over on crude, same. We're long on the 4-hour bias, but we're now short on the 30-minute. So that's telling us, hey, sit on our hands. We're not going to do anything. Let's not worry about this. We're just going to let this do what it does. If it does push back up and it breaks back above here, and our moving averages cross back over, so the green's above the red, meaning that the fast moving average is above the slow moving average, that would give us the opportunity to look for long trades in the direction of the 4-hour bias. But for right now, these are conflicting. We just don't do anything there. Gold's in the same boat. Gold is in a mixed bias as well. We've got 4-hour bias is long, but the 30-minute bias is rolled over to be short here. So we've got gold in a mixed bias. So we wouldn't look at that. If you absolutely had to do something with gold, I'd watch 1950 down to 1940 as potential buying opportunities. To go in the direction of that 4-hour trend, but it's going to be counter to what's happening here. The best bet really, is trade what we see, and if you've got a mixed bias, you're better off just not doing anything, sit on your hands. All right. So the only one we can really be watching today is the S&P. Even that, will be dependent on what happens post news and how the market digests whatever comes out of that. So I'm going to leave it there. Had somebody ask me about crypto recently. I haven't been doing a lot on crypto lately. I haven't talked about it at all. Been really focused on getting some of these, this new indicator and plan out, which I launched yesterday during a talk with, it was a big, it's going on today and tomorrow as well. So if you haven't registered for that, click the link in Facebook and register for it. It's a big multi-speaker event where a lot of different guys are talking about and girls are talking about their trading plans and how they approach the markets and whatnot. So I spoke at that yesterday and gave an opportunity for folks that haven't already gotten the indicators that I use on TradingView. Gave them the opportunity to give folks the opportunity to get into that. So that launched yesterday, and I've been kind of focused on that, getting things ready for it. So now that that's done, it's behind us, I can start getting back over to the crypto stuff as well, and we can start looking at what's happening in crypto land. Crypto is a great market to start with because it has a really low barrier of entry. As far as barriers of entry go, it's probably crypto you can get into really inexpensively and start trading. Up from that would be forex, which crypto you can start as little as $20. Forex is around 500. I think there's some places like 250, but 500 barrier of entry for forex, and then you're up into the couple of grand into futures. So that that's trading micros, right? Trading micro futures, and then up from there. So I will start talking about crypto again. I just haven't done it in a while because my charts have been loaded up with things I'm doing for the other program. But that should be ready to get back to it. I'll look at crypto tomorrow and see what we're doing on our majors. In the past we'd always talked about ETH and Bitcoin. So the Bitcoin. I don't know where that came from. Anyway, we've always talked about ETH and Bitcoin. So I'll get back to that as well. For now, I'm going to leave it here. We've talked about some ideas. Ultimately, we're laying off Forex until after Mr. Bailey speaks. We're going to see what happens on the S&P from key levels. It's the only one that has a confirmed bias that's long. So as the market gets going, we'll see what's happening. As a matter of fact, we've got this news is about to hit any moment. If you guys want to pop over here and just see what happens with spreads around news, should be fairly interesting. We can see spreads across the board are fairly normal, but now we're getting some activity as we get closer and closer to the news. They're starting to widen. As you see what I'm talking about across the board with the bid and the ask. It's not going crazy, but it's still widening. I mean, here's the pound CAD. That's like a 17 pip spread. Some are even wider. And now as the news hits, it's going to take a little while. We can see it still sees that spreads are pretty wide. This means that market hasn't returned to normal. You've got bots trading. You've got market makers trying to figure out, instantly what that news is, and then shortly after they'll start returning to the market. But as long as spreads are still wider than they're normal, you don't want to be in. It means that there's still some uncertainty in that market around the direction. So just let it sit for a little bit, and then as they get back to what their normal spread ranges are, that's letting us know, hey, the markets are kind of back to normal, and then we can start looking to see, directionality. Do we have any favor on one currency over another that's being heavily bought or heavily sold? What can we pair it against? And then ask yourself the questions, right? What direction has it been moving? Does the volume support continued movement in that direction? Does the average range support continued movement in that direction? That's important to know for just thinking through odds and probabilities. And that's the same with everything else that we trade as well, but a little more evident right here since it's right in front of us at this moment. So anyway, that's it for now. I'm gonna let you guys go, get out of here. If we have some trades to talk about at the end of the session, we'll record a market recap. I haven't recorded a market recap in a couple of weeks actually, not because there haven't been trades. It's just, again, I've been focused on getting some other things done. So we will get back to those as well. So that's it. Have a great day. Talk to you soon. Bye.